It's really exciting to be able to talk about the results from this quarter. The team's worked really hard to deliver the results that we got, and we believe first and foremost that this is only just the beginning. The real important things to point out is that the financial results for this quarter really lay the groundwork for our long-term plan, which, as we've discussed, is about moving this company to a national listing, ideally on the NASDAQ, and getting there as quickly as possible. First and foremost, we had a positive operating income for the first time in a long time, and that's a trend we look to continue as we accelerate our growth. That operating income is reflective of what the company is capable of doing and encompasses all the overhead of being a public company and all the costs associated with it, et cetera. The net income or loss is really attributable to all sorts of non-cash charges. And I think it's important that people understand that that change in derivative value, as the stock price goes down, that will go up. As the stock price goes up, that will decrease our income on a non-cash basis, non-operating basis. The important highlight of this quarter is that we are showing that operationally this company can turn a profit, can make money, and continue in the way that we always have focused as Highwire on operating and generating positive cash flow. Those are the things that we're looking to accomplish going forward. And if you look at this trend, we believe this will be the beginning of setting that expectation for a go forward. So in positive operating income, we believe we've seen the bottom in terms of revenues for the quarter. In the second quarter, we believe that not only do we see the bottom, we started to see increases, and the trends are moving in the right direction. It's important to note and understand that there is a significant change in the way our financials are reported, and that's because of our auditors late in this cycle of review and putting out the statements. In reviewing the transaction and the merger between Highwire and Spectrum, the auditors deemed that under public accounting rules, Highwire is the acquiring entity based on all the various versions of controls as defined in public accounting. So what you see in these financials is not a reflection of the combined entities. It is a reflection of the Highwire operations and about 2 weeks of the Spectrum operations. When we put forth a pro forma number for people to understand the true picture, we're looking at just shy of $11 million, about $10.8 million in pro forma revenue for the quarter. So we believe that will give people an understanding of what the company is capable of doing as we go forward. Revenue trend line in every sector of the Highwire businesses is positive. In every sector of the Spectrum businesses is positive. And as we move forward, they'll be combined. We've already combined the business entities, and we'll be reporting them differently. And that's reflected in some of the discussion and analysis in these filings. So we're pretty excited. We're very bullish on what we see the trends being, with the caveat that everything is still facing some measure of disruption. There's inflation that's causing some challenges out there, certainly putting potential pressure on margins. More importantly, supply chains still continue to be disrupted, and some of our customers are providing guidance that they don't expect normalization until late 2022. So we do expect that we'll continue to see a little choppiness and a little less rhythm than historical metrics would prove, but our focus to counter that, we can't control those factors, right? So our focus is on countering those things. And the way that we chose to counter some of these headwinds and some of these cyclical effects is to focus on recurring revenue. And our Overwatch platform does that. We're seeing tremendous growth in that in every key performance indicator in that sector. Services that can be done remotely and capitalize on some of the work at home trends that have happened and the continued move to virtualized infrastructure by the clients and capitalizing on, frankly, the lack of human capital, the tight labor markets, all of those things. We do expect to close the transaction on the Secure Voice previously announced transaction, which will add both top line and bottom line, and is all recurring revenue. So we're very excited about bringing that into the fold and being able to have those revenues before the end of the year, contributing to our overall performance and bottom line, and roughly 200 more customers. What we see through the end of the year is continued operating improvements. We've consolidated our sales team across the organizations. We're focusing on adding to that sales team across the entire organization, allowing them to optimize our customers by selling the entire portfolio of solutions across our customers. Our greatest asset is our partner base. We're growing that partner base. In the last 18 months, we've more than doubled our overall number of partners, which is just phenomenal. And we're talking about partners with really significant lifetime values as we work with them over and over and over and sign multi-year deals. So we're very excited about the trends. And as I said earlier, as we focus on the recurring revenue, you don't get that immediate pop or substantial movement on the top line right away. What starts to happen is it will slowly increase quarter over quarter, year over year, and start to stack. And as the recognition piles up, as those contracts stack on top of each other, we'll see that incremental growth. What will happen is we'll start to see EBITDA increases proportionally and a little faster than the top line does on these contracts, because that revenue is accretive. We're continuing to focus on managing our costs as we've consolidated the entire organization. We did a lot of work in the second quarter, consolidating the organizations and getting it ready for the closing of the transaction that happened. Remember, that happened very late in the quarter in June. So as we look forward, we see continued cost decreases across the board. We see continued improvements in cash flow and liquidity, and we're really focused on growing that shareholder equity. We've grown it over 10x compared to 1 year ago. The rebranding efforts will start in earnest in the coming weeks. We've been laying the groundwork internally, preparing digital asset base and those sorts of things, preparing the filings for that. So we're very excited. We expect to see that shortly. We're working here every day to build a foundation that will give us a sustainable platform to grow from. We are focused on every sector of the business being profitable, every sector of the business getting to a place where it cash flows itself or could cash flow itself. The difference being, some sectors we would plow more into marketing, sales, growth, et cetera. And we do that by design, as that will propel our market valuation that much faster. So we continue to do that work. It is hard work, something that has to be done day in, day out, requires execution. I feel very fortunate that I think we have the right team in place to do it. We hear you as our shareholders, and we value all of our shareholders and their input. We are focused on doing it in a responsible way. If you look through our filings, you'll notice that we're not and do not expect to be borrowing to finance our growth. We have set the company up in a place where it has the right level of liquidity going forward, and we want to see that only increase. So we'll make financing arrangements that have the right arrangements for the business, the right arrangements for the shareholders, and the right arrangements for the long-term value. So if we're bringing in something that has tremendous cash flow and upside opportunity, there always is potential for that sort of dilution. But we hear you. We are not looking for toxic financing. We are not in need of hard money going forward. We're moving all of our financial arrangements to better footing, and we're looking to continue to improve the balance sheet.